Hello and welcome to the week ahead from the Financial Times in London. Here are some of the big stories we'll be watching this week. British Prime Minister Theresa May will attempt to seal the first phase of Brexit talks. Investors in the US will be focused on the latest jobs data and the threat of government shutdown, and Brazil is set to take interest rates to a record low. In the latest stage of Brexit, Theresa May this week meets with EU Commission President Jean-Claude Juncker and EU Chief Negotiator Michel Barnier. Mrs May has already given significant ground on the so-called Brexit divorce bill, and the two sides are closing on an initial agreement on the Irish border and on the rights of EU nationals. That would enable EU leaders to authorise talks to move to a second phase on the framework of a future trade relationship when they meet on December the 14th and 15th. Crucially for Mrs May, her concessions do not appear to have provoked major criticism from hardline Brexiters, nor has her government so far suffered significant defeats on the EU withdrawal bill, which MPs will continue debating this week. But the details on any Irish border arrangement are far from clear, and Mrs May's cabinet is still to discuss formally what they want from trade negotiations with the EU. FT political leader writer Sebastian Payne has more.
We've reached a critical point in the Brexit process right now. The monetary settlement between the EU and the UK is pretty much there. There's also pretty much there for a deal on citizens' rights. But the Irish question still remains unsolved, and that's critical to unlocking the talks at the crucial summit on December the 14th and 15th. Theresa May will have dinner with key figures from the EU on Monday to explain to them the urgency of the December summit. And if she can convince them that they can get a consensus on sufficient progress, then they can begin talking about future relationship talks. And that's really important to ensure there isn't a British walkout and that the process continues smoothly.
The European Union will also be closely watching events in Catalonia, the troubled region in Spain, where campaigning officially begins this week for the election on December the 21st of the entire Catalan Parliament. Spanish Prime Minister Mariano Rajoy removed the Catalan government from office in October, after the pro-independence majority in the Regional Assembly voted in favour of a unilateral declaration of independence. Meanwhile, in the US on Friday, figures are expected to show that the pace of US job creation cooled in November, with the jobless rate expected to edge back up from a 17-year low. Alongside the monthly jobs report, investors will also watch to see if Congress will pass another stopgap spending bill to fund the government past December the 8th. US President Donald Trump complicated the issue by saying that he doesn't expect a deal with Democrat leaders will avoid a government shutdown due to their differences on tax and immigration. Fast FT reporter Mamda Badka assesses the likely impact on Federal Reserve thinking.
Barring the hurricane-related blip, the U.S. job market has remained strong, and some Fed officials believe that the U.S. is at full employment. So, wages will remain in focus again in the latest jobs report. Inflation has continued to undershoot the central bank's target despite outgoing Federal Reserve Chair Janet Yellen's belief that the tightening labor market will push inflation higher. Jay Powell, President Trump's nominee, seems to adopt that view. In his confirmation hearing, he sent a message of continuity when it comes to monetary policy rather than signaling radical change. For now, markets expect a rate rise in December. The Fed has currently signaled gradual rate rises next year, but it's unclear how tax reforms and a number of leadership changes at the Fed could impact that view.
Now to Brazil, which is undergoing a period of low inflation, prompting economists to predict that policymakers at the central bank will slash the country's key interest rate by 50 basis points to a record low of 7% at their Wednesday meeting. That's down from a high of 14.25% early last year. Low rates have helped an economy emerging from its worst ever recession to regain momentum, just as the country enters a big electoral year in 2018 and a sweeping corruption scandal continues to unfold. To keep rates low in the longer term, though, further fiscal reforms are necessary, as Brazil's central bank president Ilan Golfan has highlighted.
Basicamente o que a gente olha é se as reformas eles vão colocar as contas públicas em ordem, as reformas e os ajustes, se as reformas vão permitir o Brasil crescer mais rápido e se as reformas permitem que a taxa de juros neutra da economia seja menor, a taxa de juros estrutural.
The reforms will need to include changes to Brazil's over-generous pension system. However, after spending his political capital fighting corruption charges, the country's embattled president Michel Temer faces his toughest battle yet, convincing lawmakers to pass the unpopular pensions overhaul before the end of this year. And that's what the week ahead looks like from the Financial Times in London. Goodbye.